Welcome back. You're watching HFO-TV.
Please join me in welcoming Dr. Mike Wilkerson.
Thanks, Greg. Always a bold, brave move to bring an economist up right after you guys are eating. Coffee is available. I have no regression tables in my remarks. Try to speak English, not math, so that's always the objective, and happy to answer Q&A later. I think this is about 3 specific topics that I was asked to present on today. So not necessarily a broad economic overview. Many of you may have seen the PSU Center for Real Estate puts on their annual event last week, so a lot of those topics were covered there. This is more specifically about housing underproduction in the region, the City of Portland inclusionary policy, and then homelessness in the region. So kind of 3 very related topics that I was asked to present on, but certainly if there are any questions separate from that, I can do my best to talk about those issues as well. So I think when we're starting, it's important to kind of understand when you're looking at broadly at the region, public perception keys in on a few things, depending on when you survey them. So this survey was done last year sometime, and cost of housing is the #1 kind of area of influence that citizens of the region would like their public leaders to address, whether that be local or state level. And #2 is shelter for homelessness. And a lot of times we talk about those 2 things as totally related or unrelated. I think today, one of the things I'm going to spend a lot of my time talking about is that key relationship between those 2 things. And then you have a myriad of other things that, like traffic, et cetera. But by far the first 2 are keenly, housing related. So broadly, I think it's important to understand what's just happening nationally. And what's happening nationally is, over this last 10 years, is the fewest amount of units that have ever been built nationally, at least since data. So yeah, we can go back to the 1700s, but since data has been around after World War II, there's never been a time that there have been fewer units built over a 10-year period. So yeah, the trends vary between multifamily and single family, but if you just want to look at the overall numbers that are produced, it's very low. And peaked in 2016. So we are on the downward cycle in terms of this cycle, in terms of how many units are going to be produced, and that isn't going to change. Once that trend happens, you can see consistently it kind of goes down and goes up. Does that mean we're at the end of an economic expansion? I don't know. Smarter economists than me study that all day long and come up with different opinions, but I think most of the state economists out there see limited risk of recession for the next 12 months. But in terms of housing production, that trend is very pronounced and going to continue until whenever the cycle ends. Well, okay, great. So that's supply. Well, as an economist, if you say supply, you've got to quickly follow that up with demand. The demand side of things for housing is households, right? A lot of times people talk about people. People are great, but babies don't live in houses other than with their parents. It's the households we care about. So as households are formed, which is generally speaking through domestic and international migration, or more commonly, you have a child, they go off to college or they graduate high school, and at some point they leave your basement or your attic and they move out on their own. That's when a household is formed. So when you look at that relationship over time, you can see it's kind of all over the place, but nationally, 1.1 is that ratio. So that's to say there's 1.1 units of housing built for every new household that's formed. Why? Well, you guys all own real estate. You would like your vacancy to be 0, but it's not always 0. So you have to have more supply than is available. And then oftentimes when you're building new units of housing, you might demolish other units of housing. So you need to build roughly 10% more new units than are formed. Well, if you look at this giant trough over here, that's a big problem. Why? Well, if you look at every other economic expansion, what you'll see is, above the ratio of 1.1 in good times, below the ratio. Well, now we've had, as of July, will be the longest economic expansion in U.S. history, so the longest period, and we are only now just getting back to delivering that ratio. And why? Well, it's because population growth has actually slowed down is the reason why, not because we're building more units of housing. So when you look at that more specifically in an Oregon context, what you see is the green areas are producing 1 or more units. That's fine. The areas in red and orange are the problem areas. And if you look at the Portland metro, you can see from 2000 to 2016, 0.75. What does that mean? That means if 100 new households are formed, we only built 75 new units. And for those of you in this room, that's probably a good thing, because what that means, vacancy rates are going to drop, rents are going to go up, and we all saw that happening in a major way, starting in and around 2000 through where we're at today. but it has broader implications for the economy when we look at that. So we produced a study that's available on our website or our partner organization, Up for Growth, and we kind of tried to quantify what that means. So if you look at, we built an econometric model, we're not going to talk about that today, but roughly 155,000 units short. So those units can be, distributed around the state, but mostly they're concentrated in certainly the Portland Metro or the Valley as to where that is. California is, 3 million plus units, and the governor there has gotten out in front thinking he can make magic happen and build 3 million units in 8 years or something crazy like that. But we looked at it more as a 20-year slow run problem. So what has that meant in a Portland context? Well, as many of you know, rents have gone up much more quickly than incomes. So if you look at the bottom line in red, that's 60% of median family income. That's what the government looks at as the amount of income that they would subsidize a unit. So if you're talking about a low-income tax credit, those are for people earning 60% of the median income or less. The upper red line is 100% of median family income. So that's, again, if you found the median income for a household in the region, that's what that person's earning. So you have half households earning more, half the households earning less. Well, if you look at one-bedroom rent in the region, for many years, starting in 2000 all the way through 2007, 2008, it was around 60% median family income. What that means is there is no housing affordability problem, because even if you were building subsidized units, they would be renting for the exact same rent as market rate units. No housing affordability problem. As we move from 60% for an average unit up to 100%, that's the housing affordability problem. So you can see this isn't a thing that's always been around for 30 years in Portland. This is a relatively new phenomenon starting in around after the great global financial crisis. In the last year, where we have data, so 2017 to 2018, average rents in the region, slowed down from where they were growing to about 2%, whereas incomes rose at 9%. That's why that line that was going up all of a sudden flattened out. And we expect to see something similar happen when we look at 2018 to 2019 data comes out pretty soon in terms of when that adjustment will be made. So that's the kind of long-run history of where we're at. Studies have been done recently looking at this, why does that happen? And again, the answers are pretty straightforward from an economist. It's demand and it's supply. And what is the demand? The demand is really just measured in terms of population growth. So they did a study looking from 2000 to 2018, and for every 1% population grows, they found that housing prices increased by 2% or 2.2% to be specific. So prices are growing faster than population growth, and for many years, Portland has been one of the fastest growing regions in the country in terms of population growth purely from domestic migration. That trend has reversed a lot in the last couple of years. So that big demand push was there, and in the next year or two, the forecast for population growths are slowing down a little bit. So I think that explains a lot of what we did see, but also can be helpful in looking forward to understand what we might see going forward. The other side, and I think the more critical side, is the supply side of the equation. So when you look at City of Portland in terms of how many apartments have been built, at the peak of the last cycle, 2006, the most units that were built in the city, 3,000. In the last 2 years, 6,500 were built in 2017, 5,900 in 2018. So, more than double in 1 year what had been previously the most units ever built. So from a supply side, it took a long time to get there, but we finally did kind of build roughly, enough units in that given year for what population growth had been. What we didn't do was build enough units for all of the population that had come to the region starting in 2007, 2008. And that's why you have that big underproduction. Well, economists like to pretend that they can forecast things. I'm not one of those. I don't have a crystal ball. I don't know what's going to happen. But I can kind of look at data and get a sense of what's going to happen. What I can tell you is going to happen is we are going to build far fewer units in 2019, even fewer in 2020, and near zero in 2021 as of today. How do you know that? Well, when you're in real estate, it's the easiest thing to forecast because everything is at least 2 years out in terms of when it's going to get delivered. And you can start looking back well before that in terms of early assistance, land use review, building permitting, and you can kind of see what that pipeline looks like. So when we look out into the future, there are 8,000 units in the city under construction today. How many of those are exactly going to get delivered in 2019? Let's say roughly half of those. So it'll be around 5,000 this year, around 4,000 remaining units next year. And then when we look at the pipeline, which we'll do in a minute for inclusionary, dries up to almost nothing. So this is a big problem from a regional economy standpoint. As an owner of real estate, though, this is a sign that you should start to understand is if your vacancy rates are starting to tick up or you're having to offer concessions, the number of buildings that are going to get built is going to be far fewer this year and next year and then drop off a cliff after that year. And then it's really about incomes and population, and that has a lot to do with the national economy more so than specifically what's happening in Portland. So that's kind of a look into the future about what we might see. One of the benefits to the region, or for you guys not a benefit, is rent growth has slowed. Right? When all those units were built in 2017 and 2018, what happened was rents at the high end, so new construction, actually on a year-over-year basis for a building dropped. At the, that's helpful, the legend, more than $2,000. At the $1,000, $1,500 to $2,000, basically were flat. At the lower ends, less than $1,000 and $1,000 to $1,500, rents were still increasing, but at a lower rate than they had been from 17 to 18. And that's in direct relation to all that supply coming online. What's going to happen is the exact opposite of that. So for many years where we haven't been building enough housing and rents were going up at, let's say, near 10% a year, that was when we weren't building housing. When we build enough housing, we can see what happens. So the data that gets quoted in newspapers and in Zillow, et cetera, is rents are going up at 0 in Portland. That's not what I see when I look at the data. Maybe on average you could look at that, but what you see is on a building over building basis, year over year, you're still increasing your rents in the areas that are in highest demand. And where are those areas? Where rents are lowest. There's the most competition for those numbers of units. At the high end, there's only so many people who can afford $2,500 a month for a one-bedroom apartment. So when you build, right, you're building at that high end, but at the low end, that's where most of the competition is. And what we can see is over time, the term is naturally occurring affordable units. What that means is a fancy way of saying non-regulated units. It's just units that are affordable to a certain group of people. If you look all the way on the left side of the chart, you can see the purple is areas where people could afford it earning 60% of MFI. The blue areas are 80% or less. So that's oftentimes called workforce housing. So, above the threshold for federal subsidy, but kind of still moderately affordable. If you look back to 2000, that's 85% of all units were affordable to people earning 80% and less, right? And that's that chart we showed earlier. Well, look at it today. The growth is at over 100% of MFI, or over 120% of MFI. So the distribution over time in terms of numbers of units that are affordable to people earning 60% is dropping. Why is that? Well, you don't build new units that rent for that price. So the existing units that all of you own get bid up over time, and they become increasingly less affordable as incomes have stagnated. So this is a long-term trend that's been many years in the making. And the problem for the housing market is you can build a lot of new units, but the process by which they become more affordable over time, sometimes called filtering or depreciation, takes a long period of time for them to become affordable. So this big growth in units that are newly constructed will help regional affordability maybe 15 years from now, but they're not going to help today's crisis. So really this is kind of the combination of all of those factors we've been talking about in terms of the massive decline in naturally affordable units. That leads us directly to homelessness. And why does that lead us to homelessness? The median rent in a market is the #1 predictor for the homelessness rate. Nothing to do with climate, nothing to do with location, nothing to do with personal circumstance, alcoholism rates, et cetera, crime. None of those things matter nearly to the extent that median rent. If you just know what rent is, you can pretty much already know what the homelessness rate's going to be. And for the Portland region, Portland has the 8th highest rate of homelessness of any city in the country or major metro in the country. And you can see it on the chart there, is in and around Las Vegas, Seattle, New York, San Francisco, San Jose, and then Portland. So sometimes it's good to be associated with those cities when you're talking about economic power. In this case, we don't want to be mentioned in those similar cities. And if you travel, last week I was in DC, the week before that I was in San Francisco, the week before that I was in Seattle. Portland is the same. It's very visible, right? And so I think this is the question is, what is the homelessness problem and how can we start to understand what causes it and more importantly, what can we do to help with it? So the first thing is this relationship of, as people can no longer afford an apartment, they're left with no other choices, right? They can leave the region, and oftentimes they go directly into bouts of short-term homelessness. So what we can look at is, how does Portland stack up to other regions? And what this is it's a histogram. It's a fancy way of saying it's a count of the number of units that are available at different price points. So you can see the big part of the hump is in and around 90% of area median income. What that means is there's 2,500 units in Portland of one and two bedrooms that would be affordable to people earning that. As you go down, you can see it drops. So when you get to 50, there are only 500 units. When you go up the other end, up over to 150, those are your new construction luxury units. So this is what Portland's distribution looks like. And we can overlay with that Seattle. So that's the darker blue area. And what you can see is, obviously, Seattle is a much bigger market than we are. So the high points are higher. But what's more interesting is it's shifted out to the right, which means Seattle is, on average, less affordable than Portland is. So this is a way you can start to think about, why do certain cities have higher homelessness rates? It's because unless you're earning above 100% of the median income, it's very difficult to find a place to live. And then we can go to our favorite example, San Francisco, and you can see the scale just shifted way out to where many units in San Francisco are 150, 200, 250% of area median income. So as an example, area median income in San Francisco is about $117,000. So you need to be earning $150,000+ to afford kind of a middle-of-the-road apartment. Portland is not necessarily in that predicament. But in terms of just understanding where we are, I think this is a cautionary tale of, if we keep doing what we're doing, we're going to start to look a lot more like Seattle, and Seattle for sure is doing all they can do to make themselves look a lot more like San Francisco. And we know that the negative byproduct of that is going to be a continued increase in homelessness as this continues to happen. What can we do to help with that? Well, new construction is one of the answers. The challenge is, when you build new construction, you're not building it at 60%, you're not building it at 80%, and you're maybe building it at 100% of area median income if you can figure out how to build cost efficiently. And you can see again, though, when you look at San Francisco, their new construction is near 200%. So what they're doing isn't helping the problem at all. Seattle is that middle case, and Portland, at least here, we're able to still build some units in and around 100%. So that just means it'll be more helpful sooner in Portland when you build a new unit that's renting at 100% than it would be in Seattle and San Francisco. So that's kind of just a regional context of what's going on. So in that same survey of Portland residents, the question was, what is the key determinant in homelessness? And you see two answers: high cost of housing or personal circumstances. And people kind of fall into those two camps. And I think it's really about where you live and what's visible, right? If you live and work in downtown Portland, what you see is a very visible, chronically homeless group, and you assume that the reason for that is because of personal circumstance. If you're out in some other areas of the region, you may not see it as visibly, but you understand it's a problem, and you understand that you may know of a family, and certainly as owners of real estate, you know many people who haven't been able to afford rent, and we know what's likely to happen when they can no longer afford rent is they're going to be falling into homelessness. So that's due to the high cost of housing relative to their incomes. So we see both those answers, and really it's correct that both of those are the answers as to what's happening. And we wrote a report for the Oregon Community Foundation this fall, kind of diving deep into this question. In my 8 years at ECHO, I've never written a report that's been as visible as this. The number of requests we get to talk about this, the follow-on reports that we're doing for this are huge. I think it's just people all have their mental model about what it is that's causing the problem, and understanding that your understanding of the problem is probably only generally half of it, one side of the equation or the other. So helping putting it all together with some data has been, I think, pretty helpful for the discussion. Well, what do we see? Well, what we see is, in Portland specifically, we're a rarity in that there are 4 counties in this metro area. Most cities have 1 metro. So when we look at city, we assume Portland, we assume Multnomah County, and you can see that it's 4 times any of the next counties of Clackamas, Clark, and Washington County. So there is certainly a homeless population in all 4 of the counties, but it's really, I think, Multnomah County. And what we can see is if you go back to 2007, the point-in-time counts are showing fewer homeless people today than there were in 2007, 2008, 2011 even. It's really bottomed out in 2015 to 2017. So how is that the case? Well, the first part of it is point-in-time counts are a difficult way to accurately gauge a population. What that means is on one night, they try to count everybody. So you can imagine trying to count an entire population. You can't do it, then they estimate and they make some assumptions, et cetera. So it's not a very robust methodology. So a lot of that is probably measurement error. I don't know that I have a better answer. I'm not an authority on doing that. I'm not trying to say I know of a better way. It's just that's what the nature of the data is, that its margins of error are pretty large. The other answer is, I think what we see is a slow rise in the chronically homeless. So if you go back to 2007, you had about 1,200. Now it's up to 1,700. So those chronically homeless populations are generally the more visible ones, oftentimes ones with personal circumstance. So if the overall number in the region has dropped, but the visible portion of that has continued to grow, I think that's what most people are seeing. And it's this Multnomah County-centric area that we generally see that. So that's been steadily climbing over the years. Well, what do we do about it? I think the answer is many things, none of which are easy. And this is part of the challenge in addressing this problem. So the first thing is we need to build more housing, right? The evidence is very clear. The evidence is very clear in Portland that the decline of naturally affording units is happening and will continue to happen. The evidence is also very clear that as you build new units of housing, it takes a long period of time for that to benefit all the way down. That doesn't mean that you shouldn't build, right? A lot of people say, well, if that's not going to help today, then that's not something we should focus on. Well, why should you focus on it? It's the most cost-effective, it's the only cost-effective way to actually address the problem. So that needs to be always top of mind. And we have our little pyramid. That's the biggest reason. The second is means-tested subsidized housing. So what is that? Rent-restricted units, whether that's Section 8 or other HUD programs, City of Portland, anything that's means-tested that's providing, anchoring someone's rent to their income is going to be helpful in helping them avoid homelessness. Targeted programming for high-cost, high-needs individuals. Again, this is the most visible chronic population, very costly to deal with, but is really the only way to do that. And as a last resort, and as a last resort only, emergency shelters. The problem isn't building enough emergency shelters. Evidence is very clear that that does nothing to actually help the problem. Is it preferred to not having them? Yes, preferred to not having them, but it's not going to help address homelessness in the short run or the long run. So some studies have been done with HUD, and they looked at assigning vouchers, so housing choice vouchers, to households. And they did a blind test of some people got short-term assistance, some people got longer-term voucher assistance. And both of them were hugely helpful in helping people avoid emergency shelters. So why is that? Well, I think a lot of it is the evidence shows most families cannot absorb a $400 emergency cost. And when you look at what's causing most evictions, it's the lion's share. You guys would know this data, but in Seattle, there was a study that was out. 85% were failure to pay rent. Of those 87%, 80% of those were due to emergency circumstance, medical, work-related, et cetera, to where 1 month's failure to pay rent is that reason. So if you can get housing voucher assistance for even a short period of time to accumulate enough of a savings cushion to where you can absorb one event, that alone is going to be helpful. So I think, if anything, my take on this would be, maybe you're better off doing lots of short-term assistance rather than concentrating a few lottery winners in terms of long-term assistance. Either way, the benefits are huge, and you see very few households falling back into homelessness. In a Portland context, we have about 32 households receiving assistance, but there are an additional probably 50 to 60,000 households who are cost-burdened or severely cost-burdened. That means are spending 30 or 50% of their gross income on housing. And when you qualify a tenant and they come to you and they're earning twice their income, that's not going to qualify them. And there's a huge proportion of households in Portland, especially ones who are earning lower than 50 or 60% of MFI. If you were to try to provide vouchers for those 56,000 households, it would cost $500 million a year. That's why number one in the pyramid is provide market rate housing, because if you truly want to solve this problem, it's going to take a coordinated effort for many years. But there are other things that you can do. So really, this is two very related crises. One involves about 1,700 people who are struggling with mental, physical abuse, criminal records, et cetera, and that is a barrier for them. And this is in every community. But you would look at some regions in the country that have much higher rates of alcohol abuse, et cetera, than Portland, and their homelessness problem is much lower than ours. And the reason for that is the larger part of the problem is these tens of thousands of people who are in and out of short-term homelessness or long-term homelessness, and that's almost entirely due to cost burdening and their inability to pay rent on a month-to-month basis. So Portland happens to be, unfortunately, one of the places where that's happening more than any other, to where it's number 8. We're number 8 in terms of metros in the region because of undersupplied housing, right? And then the lack of dollars coming in from a federal standpoint. Both those two combined lead to high rates of homelessness, and it shouldn't be a surprise as to why that's happening. Okay, what is the city of Portland doing to help the inclusionary housing problem? That was a joke. So we're 2 years in. Unfortunately, 2 years ago, or 2 years ago in 2 months, many economists, or all economists, had a pretty good idea of what was going to happen, and unfortunately, that very thing has happened. And what is that? Well, it's the amount of construction activity and permitting has decreased in Portland and the region, but specifically Portland. I think this is the point that I need to rest on for a long period of time. Inclusionary housing is not the only reason. It's one people want to talk about because it's kind of a self-inflicted wound, right? Something that we could have calibrated differently that maybe wouldn't have had the same impacts, but it is not the only reason. The main reasons are construction costs are increasing at a time when rents are stagnating, land prices are high, and we've delivered a lot of units, so absorption is a problem. And frankly, many lenders don't want to lend in Portland right now because of the risk of all of those things, plus some of the things that our friends from Balgenic will talk about in terms of additional arsenal that the state has heaped upon Portland in terms of requirements. So I think that is the number one takeaway here, is this is not only an inclusionary problem, but it is certainly not helping. The vested units, so what are vested units? So in all the way through February of 2017, if you got into a land use review, which is the lowest hurdle of requirements for permitting, you have a 3-year clock. And every developer who ever had an inkling of thinking about developing a site did that. So we had 3 or 4 years of supply of units vest in land use review at that time. That clock is going to expire in end of January next year. Right now, there are only 3,000 or 3,500 units left in that vested queue. So what's been happening is all of the units that have been getting through permitting and are under construction today are those vested units. That's those 8,000. Once the vested queue is done, what are we going to be left with? We're going to be left with units subject to inclusionary. What do we see as a response? We see a big increase in the number of under construction and permitted buildings with 19 and fewer units. Why is that? The city of Portland said if you're 20 units or more, you're subject. If you're not, you aren't. And shockingly, the market responds to incentives. When you say you can pay an exaction or not, then anything that's even remotely close to building over 20 is going to build less than 20. Another thing that's happening, which I would say is maybe the only benefit, is the policy calibration allows for lower inclusionary rates in things like waived parking ratios, which has allowed for some smaller scale development outside of the core where most of the units have been built. So if anything, that's wouldn't be happening absent the policy because they wouldn't get those policy incentives. So areas with lower rent are seeing some new development that probably wouldn't have seen without this. And how do we know that? People have voluntarily entered the program. So they were vested, but the benefits of entering in for inclusionary policy outweighed the costs. So that's how we know that the program is a benefit, because why would you ever agree to enter into something that was worse off than you would have been? And there are numerous examples of that. So we know that that is the case for sure in some instances. Well, what is PHB saying? Well, they built a really fancy website touting the success of inclusionary housing in Portland. What they haven't done is do what they're statutorily required to do, which is produce a report every 6 months, which would now be the 2-year report, talking about the actual data behind the program. So we work with PHP regularly, but I might suggest rather than spending money building a fancy website, you might want to just produce the report so we can all understand what that is. Thankfully for us, we have data, so we don't have to take their word for it, and we can look into the program ourselves. What do they say? They say that they've saved $34 million by building 422 units that otherwise wouldn't have been built affordably. And they're mostly right, other than almost 1,000 of those units that were built and 100 of the inclusionary, or 75 of the inclusionary units were their projects. So if they're funding a project, I wouldn't think of that as the success of the program. That was going to happen anyways, regardless of that. So again, nitpicking a little bit here, but it's really probably more like 350 units rather than 422 units. And again, that's over a 2-year period. What was the city hoping and expecting to happen? Anyone know when they implemented the program? How many units were they predicting would be built every year? About 1,500 units a year. So when you're doing, a third of that over a 2-year period, that's probably not something you would want to point to as the, quote, successes of inclusionary housing, or whatever they said on this. Success of inclusionary housing. Yes. Is the region better off for those units? Certainly, but there's a cost associated with those. And what is that cost? If the cost is delivery of fewer units than would have been built otherwise, you have to take the benefits along with the costs to understand the net impacts. So their estimate is there are 9,200 units in some stage of pre-permitting and 65 projects. Part of the issue is when you go in for pre-permitting, that's literally nothing. And when you do land use, you still aren't required to give a number of units. So this is entirely a guess. Is it informed by discussions with the developers? Yes, but there's no rigor or certainty to any of this. But the 5,000 number means absolutely nothing, and the 3,300 maybe means something. So when you're looking forward, what does that mean? Well, I look at this as we have a vested queue of remaining units of 3,000. How many of those are going to go forward in the next 8 months? My guess would be very, very few. The market conditions have been steadily trending in a certain way, and that's not improving. So if you had a project that you wanted to build, you probably would have built it already. Does that mean none of those will go forward? No, there will probably be some, but it's not going to be all 3,000. The more important piece is, of the 3,300, how many of those are speculative projects that aren't going to go forward in any degree of certainty? Our guess in looking at all of the projects is about 2,000 of the 3,300 are likely to go forward. So there's 2 projects alone that are 1,000 each, which are nowhere near implementation and not likely to go forward. They have a land use review, which is the requirement of what you do for a master plan, but they're not actively developing those projects. So the 9,200 number I would look at as more like 1,000 would be an educated guess of how many units are in the PHP eligible units plus whatever's in the vested pipeline as what's likely to come forward over the next 2 or 3 years, which was my earlier statement about how you might see hundreds of units built in 2021. So the decrease in permit activity is stark. This is the data. You can see in 2018 there are 1,700 permitted units under inclusionary. That would lead to roughly 200 units in that year. So again, that's right on pace with the first 2 years of the program, where 200 a year. We're likely to see another 200 when those come forward. 2019, again, we're in May. This data is as of April, 700 units. So multiply by 3, you're at maybe 2,000 units permitted in a year. And you can see the trend is steadily declining. In 2018, what we did see is most of them were vested, or they were less than 20. So 12 to 20 units or less than 12 units is another 1,000. So of the units that are under building permit under 2018, again, it's only those 1,700 out of all of them. The number of units at 12 to 19 has steadily increased. If you go in and around North and Northeast Portland, you see them all over the place. they're what would have in a single family zone, adding density is great. However, the reason they're doing this isn't necessarily the economics. The trend nationally is that these types of construction are drying up almost entirely. It's oftentimes called missing middle housing. You just don't see a lot of it. Here you see a lot of it because of inclusionary. So if you wanted to make a policy statement, you could say, implement a poorly calibrated inclusionary housing policy and you'll get a lot of missing middle housing. So that's one way to think about solving the missing middle housing. Unfortunately, at least in most economists' opinion, the costs of a poorly implemented policy far outweigh the benefits from this type of construction. The question is, how do you get both? I think is what everybody wants to know. If I have that answer, come see me later, but I don't know that I've formulated that yet. So what are my final thoughts for those of you in this room before I turn it over to the smart people? There is a lot of demand for the product that you own. Why? City of Portland and Metro both passed housing bonds where they're all targeting the same thing. What are they targeting? Units that are where they can preserve affordability, that are valued at $175,000 or less. I would venture in this room, I don't know, Greg, 50% or more of those units in the market are probably owned. It's right. There's the number of those units is dwindling, over time. I think Greg has some of that data. On top of that, we have the emergence of social equity funds. So Girding Edelin and Meyer Memorial Trust have combined together to form a $300 million fund where they want to acquire units for the purposes of preservation. Same type of units they're going to be targeting. What do they want to do? A little bit higher up on the income spectrum, so 80 to 120% AMI. But again, they want to buy units where their model only allows them to spend a very small amount on rehab. So they're not trying to reposition the unit. They're just trying to do any deferred maintenance and then continue to rent it at rates that are affordable to workhouse housing. So those two demand are there, and they need to move quickly on both of those things. So understanding that as a general market dynamic, I think is probably far more important for people in this room than kind of most of the discussion that we've had earlier about developing new units. On top of those 2 points, new construction is facing big challenges in terms of financial feasibility. So many conversations that I've had over the past couple of months with contractors, developers, REITs, institutional capital, they're all moving out of development into an acquisition phase, specifically to Portland, but also broadly around the country. So when you have Portland, City of Portland, Metro, social capital, and institutional capital all looking to figure out what they want to buy, what do they want to buy? They want to buy units that are in short demand, and we showed that earlier with the decline of the NOAA missing middle units. Then you throw on top of that City of Portland apartment registry requirements, tenant protection laws in the city and the state, and rent control, and that's going to put in a risk premium on the cap rate. So what does that mean? I don't know. We've looked at the cap rate risk in some other markets that have rent control. It might be 50 basis points, which is very significant when you're talking about valuing your units. So understand you kind of have these dueling factors. There's maybe an increase in demand, but they might price in some more risk than you've seen traditionally in the market. And then a year ago, I would have said mortgage rates are going to be higher than they are today. Along with everybody else, was wrong. And cap rates, similarly, I think people think that this trend of cap rates steadily declining over 20 years or so, 15 years, has to end at some point. So when that happens, that's going to be a challenge for when you're looking to own and retain assets. So I think that last point is, I don't know, but again, you look historically at where mortgage rates are, they can't get much lower than they are now. You look at where cap rates are, it'd be difficult for them to get a lot lower than they are. So those are more likely to go up than they are to go down. I said the same thing last year and I was wrong, so maybe I'm wrong again. But I think those first 3 bullets are the main areas of interest. So with that, I will turn it over to Bal Janik and field questions later.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.